Getting your hands on an extra $1,000 can feel like an urgent mission when an unexpected bill hits or an emergency pops up and traditional banking options just move too slowly. Cash App has evolved from a simple peer-to-peer money transfer tool into a financial ecosystem offering everything from debit cards to direct deposits and even short-term borrowing features. Navigating how these digital financial apps work requires understanding their specific eligibility rules and hidden caps before you start tapping around your screen hoping for funds. The feature everyone looks for when they need quick cash on the platform is officially known as Cash App Borrow, a small dollar loan program designed to provide eligible users with quick access to funds ranging from $20 up to $200 or occasionally more depending on account history. Right away, it is crucial to address the specific question about borrowing $1,000 through this exact feature because the hard limit for Cash App Borrow is currently far below that amount, meaning you cannot walk into the app and secure a $1,000 loan directly through their standard borrowing portal. The maximum limits typically cap out at a few $100s for users who have built up significant account activity, meaning that anyone needing a full grand will need to look at alternative avenues or combine multiple resources to bridge that financial gap. Gaining access to the borrow feature itself is not something you can simply unlock by toggling a setting or paying a fee because Cash App uses an automated, proprietary algorithm to determine who gets offered the option. Accounts that show consistent monthly direct deposits, regular peer-to-peer activity, frequent use of the cash card, and a positive overall balance history are far more likely to see the Borrow tab appear eventually in their banking section. The platform evaluates your financial habits quietly in the background, and if the system decides your account meets their internal risk criteria, the feature will pop up automatically without any manual application process required on your part. When you do manage to unlock a smaller loan amount through the feature and accept the terms, you will encounter a flat 4% fee on the borrowed amount rather than a traditional compounding annual percentage rate, followed by a standard 4-week repayment window. Missing this repayment deadline triggers additional late fees and can permanently restrict your access to the borrowing feature, making it vital to treat these short-term advances with the same seriousness as any traditional bank loan. Because the maximum limits are restricted to smaller amounts, relying on this tool for major financial emergencies requires careful planning and a clear understanding that it functions strictly as a microloan rather than a substantial personal loan product. Exploring alternative ways to secure a larger sum like $1,000 leads many people to look at traditional bank personal loans, credit card cash advances, or peer-to-peer lending networks where higher limits are standard practice. Credit unions often provide lower interest rates and more flexible repayment terms for members in need of emergency funds compared to digital wallet features or high-interest payday lenders. Building a strong credit score and maintaining a reliable emergency savings account remain the most effective strategies for ensuring you can access larger amounts of money quickly whenever unexpected life expenses arise.